Thank you so much. It's always tough to do a post-break session, and it's always tough to do it within 30 minutes on a topic which is so, I would say, varied and so important for India. Very warm welcome to all our esteemed panelists. Before we deep dive into the questions, some trends I would like to play back from an overall global and India perspective. I think refining and petrochemicals truly is becoming more diverse as we speak. I think number one, we are seeing global supply uncertainty in terms of crude. How much of that crude Asia and India gets will remain to be seen. It is important also to note that we need or we continue to need big discoveries to keep the refining engine going. That is one. Second is that demand will continue to grow, at least in countries like India and China. I mean, India itself has a capacity of close to about 250 odd million metric tons per annum. And there is line of sight to 300 plus million metric tons per annum. And hence, capacity addition will be driven by India and China. On the other hand, if you look at IOCs, which are the international oil companies, many of them are trying to rationalize their overall refining portfolio, converting it to either biorefineries or just reducing overall investment. And also, purely if I talk in terms of products, means of over the last 2 years, we have seen diesel have better cracks as compared to gasoline. Petrochemical from an India perspective is super critical because we have one of the lowest per capita consumptions of petrochemical in the world. So with all those topics put together, let's dedicate the next 30 odd minutes to find out more from industry stalwarts in terms of what the future is looking like. And let me start off with Mr. Khanna. BPCL is a prominent player in the overall refining landscape of the country. And, like some of the points that I was making in terms of supply uncertainty, looking at net zero targets that India and many oil and gas companies have taken. What is BPCL's long-term strategy in terms of predictability, in terms of growth, and in terms of sustainability, specifically in refining, which is at the forefront of the energy transition?
Thank you, Kaustubh, and very good evening to all. At the outset, first, let me thank ET World for giving this opportunity. Coming to the point of regarding the sustainability, let me put answer in two parts. One is a short term, one is long term. In the short term, which is span of 1 to 3 years, one thing we are targeting to have a wide range of basket. In fact, today only one journalist was asking, are you going for the Venezuelan crude? I said, we have checked it and we are becoming much more aggressive, being 3 refineries with us. We are looking for the mixed crude and we are making our refineries ready for any type of impurities in all the 3 refineries. So that's a short term. We are also working on improving the energy efficiency. We are also working on improving the reliability of the refineries. So these are the ways through which we are looking for the short term improvement. For the long term, we know that the plateau is going to be there in the demand for the petroleum product. The growth is definitely going to go down. The trends will go downward and we have to be future ready. And one of the way is the petchem. And in next 5 years, our mega investment is there in the field of petchem at our Bina refinery and at Kochi refinery. And thereafter, plans are there even for Mumbai refinery. So that is one. Another field which we are planning in a big way is the gas. As of now, when we are talking along with our JVs, we are having around 50 CGDs across the country. And that is a one field where we would like to go in much bigger way. We are making our refineries ready for any type of gas swing. If the prices go down, we should go for huge consumption for our refineries and vice versa. So that is another field where we are working. And we were into the upstream way back in 90s. when it was not so common for oil marketing companies, but we were one of the pioneer, and we are expecting that in another 3 to 5 years, we will be having returns in a big way. So these are the few actions by BPCL in short and long time to in the field of sustainability. Thank you.
Thanks a lot, Mr. Khanna. Very insightful. You spoke about a range of options that at least BPCL is investing in. Moving on, I would like to come to Mr. Tongaonkar, Director Finance at MRPL. Nowadays, oil and gas companies have choices of capital allocation both on the conventional energy side as well as the non-conventional energy side, which is alternate energy. What are some of the investment opportunities that you and your organization are looking at from a oil and gas perspective as well as an outside oil and gas perspective, investment as well as partnership opportunities?
Thank you, Kaustubh, and a very good evening to all of the participants over here, and happy to be over here. First of all, we are a standalone refinery, so to say. We have plans. We do realize that over a period of time, refining or oil and gas is likely to move out of the limelight. So there are different avenues that we are looking at. Transportation fuels have been one of the biggest drivers for oil and gas industry. However, things are likely to change. So we are preparing ourselves for that change. We are, however, we are conscious that in India, the story could be slightly different from the world. India would continue to be dependent on oil and gas for at least till 2050 and further ahead, although renewables would increase. So we have both short-term plans, medium-term and long-term, looking at first improving our operational efficiencies in the refining, wherein we have planned to have capital projects which would add on to the refining margins or help us tide over the difficult times. We are looking at also, we are trying to ensure that while we expand, we also are conscious of our carbon footprint. We are conscious that we reduce the carbon footprint as such. So we are looking at avenues to wherein projects are available which would help us to achieve both the goals. So we are moving away from having captive power. We would continue to have it, but we'll reduce it. We are going in for grid power, wherein we would also be looking at green power. So that reduces our carbon footprint. We have switched over to gas for fuel. So that also reduces it. We are also looking at new projects which would take care of the existing streams that we have in the refining. And it could also improve our petrochemical percentage. We are currently around 10% as petchem footprint. We want to increase it to 12.5%. We are looking at projects which are available. We already have a polypropylene plant over there. We will expand that. We are looking into other other petrochemicals, wherein we would be capturing ethylene and butylene from the existing streams as such. When it comes to new projects, green ticket projects, I think everybody would be aware that ONGC has already declared that they are going in for O2C plant, which would be a big ticket green plant, new greenfield project. It would be about 40 to 50,000 crore project. We would be partnering with ONGC, and it would be, I think, one of the biggest single location plant which is likely to come up over here. We already have moved ahead in acquisition of land over there, so we seem to have a lot of head start. That is a very big one single location project that we are looking at it. Beyond oil and gas or beyond petchem also, we are looking at green hydrogen. There also we are planning to partner with ONGC. ONGC has got big plans in this thing, in green and renewable spaces. We would be partnering with them. And most of these projects are likely to be at Mangalore only. And we are right next door. So it helps in that we could be sharing our utilities, we'll be sharing our other facilities, etc. So that is in the short term. We would be happy to work with other partners also, but that is yet to be considered. It would, as we move forward, we'll be looking at those projects. Thank you.
Thanks a lot, Mr. Tongaonkar. I think from one standalone refinery to probably another, I wanted to come over to Mr. Bhaskar Jyoti Phukan, MD, Numaligarh Refineries Limited. Sir, I think many of you in the room would know that NRL is undergoing a massive expansion from 3 to 9 MMTPA. And there would be questions just in terms of understanding how do you justify the returns on this massive capital investment that is happening in light of all the energy transition buzz that is there. So it would be good to hear from you this perspective, sir.
A very good afternoon. Thank you. Thanks, ET, for giving this opportunity. Kaustubh also for putting this very relevant question. A lot of people keep on asking this question. Why on earth you are investing so much when actually you are having transition? Because, see, one thing, it has become somewhat fait accompli. Actually, we were planning this expansion right from 2011. Actually, you know that we are a very small refinery. For long-term sustenance, we had to actually become little bigger. Yeah. Otherwise, your operating cost will catch up with the GRM available. If you historically see, we are a $7 per barrel kind of a refinery. And gradually, our operating costs were eating up that margin, whatever was available. So we had to expand. That was the compulsion. And the market also was there in the vicinity of northeastern region, and places like Bihar and West Bengal, who has not seen growth, has seen a decadal growth in double digit. So that you may be aware of. So that we saw that as an opportunity, and that's why we had embarked on that proposal. By the time it got approved, we also realized that transition has come faster than expected. So we took a pivot, and we actually migrated to somewhat smarter kind of a refinery configuration in between after the approval. And we are now petrochemical ready. In fact, petrochemical project has also been approved. And maybe in 5 years or 4.5 years time, from a $7 GRM company, we will migrate to $12 per barrel. So that is the kind of expectation we have. Of course, petrochemical, my colleague from MRPL will also suggest that petchem margins do not remain steady all the time. Now we are going through a low cycle. Perhaps again it will come up. Fortunately, what we have learned, petrochemical develops as a hub. Hopefully, India will become a petchem hub going forward. And to maximize the margin, we are also trying to look at the route to market in a different way. And being a small gives some advantage at times, so that we can go down a little bit on the value chain to capture maximum value which is available to us. That is the plan as such, but there are some mandates which will keep on coming, like green hydrogen. We are also mandated to do, and we are doing. It adds on to the cost. And you have seen even the domestic natural gas prices has gone upwards. And that is also likely to have a negative impact on the margins. But nevertheless, the products that we are going to produce is going to fetch us good GPW. So therefore, GRM will become steady. Only point that I wanted to make here is that only focus now is to remain nimble. Suppose some product suffers because of the transition more than the other. Suppose diesel goes down very rapidly. We are thinking that diesel will grow and grow. It may not grow. So do I have a capability of producing ATF instead of diesel? So those things we are making the refinery ready. So idea is to remain nimble on the product line.
Thank you, Mr. Phukan. Very helpful. You spoke at length about petchem, and like I said in my opening context setting, that petchem, there are two issues not issues, but opportunities with petchem in India. We have very low per capita petchem consumption, and our petchem intensity is also very low. You know, the amount of petchem that can replace base material is much lower in India as compared to other countries, and that is a good segue to my next question to Mr. Gurinder Singh, MD OPAL. To just understand that what are some of the early signs of petchem getting integrated into the refineries and the larger energy value chain. Would be good to hear your perspectives on that, sir.
Thank you, Kaustubh. And a big shout to everyone for sitting late for this session, where finally some truths are emerging. You heard the concerns about fuels margins. And there is a term which I'll borrow from Daniel Yargin, S&P Global. the worry is big oil may shift to big shovel with electrification, mining industry like copper industry. So these things have come into the discussion, public discussion. So that's the problem statement, that how can refineries maintain their margins, their cash flows? And one of the answers is integrating with petchem. In India, if you see, since maybe 2015 or earlier, all petchem expansions have been integrated with refineries. So refineries have moved ahead and integrated petchems in them, whether it was BPCL or even Reliance Jamnagar, HPCL, then HMEL in north in Bathinda. So they all have integrated refineries with petchem. And then they also run very robust real-time optimization models to have a stable cash flow and stable margins, whether you operate, maximize on refining products or you maximize on petchem products. So this is a general trend which we are seeing. But in India, this is at a very, very initial stage. People have put crackers so that they can use the naphtha to convert into petrochemicals. Whereas outside, if you see, this percentage of integrating refinery with petchems have moved much higher. Chinese were the first one, so they moved up to 40% to 50%. But the problem there was that the kind of products they produced, it created overcapacity in petchems, and to such a great extent that all new projects in India in those petchem space got stalled. And many believe that these overcapacities may not run out for next 5-6 years. In fact, some who have invested recently in those sectors may not see margin, even in India, may not see margins coming back for 5-6 years. So that's a problem. And that also gives a challenge and an opportunity that in petchem, if you move to 40%, 50% integration, then what kind of end products do you want to make? And how do you ensure that a downstream industry develops? See, this is a big ticket investment. A petchem and a refinery integration, even for a refinery of say 16 million metric ton to 20 million metric ton, based on integration, the capex ticket is $12 to $15 billion. And once you have these monomers coming out of these plants, you will have end industry developing around you. And that's what government has been doing, talking about PCPIRs and parks, chemical parks. So you have a big investor, big ticket, early investor, and then everyone develops around them. Dahej has been a very good example of that. Others are yet to catch up. So that's one challenge. We'll have to figure out that if we make petchem, then what kind of petchem? And the advantage in petchem is you are more broad-based in the general economy. You would be an energy infrastructure player, like all pipes, Har Ghar Jal Yojana, government spending in infrastructure building, in energy, wires and cables, packaging industry, food preservation. So once you are on petchem, so all these sectors open up to you, and that's what gives you stable margins. If you go back to like Middle East producers, so their problem is that in case oil, I mean, we have been saying that oil will remain a big part of an energy mix for years to come, but at what price? Will you have the same margins what you are having today? So what is left in the ground may have a much lower and lower value going forward. So they have gone up to 80%, 70 to 80% of integration. There are 2-3 projects which have been announced, and some pilot projects have been announced. Aramco has taken a lead. There is a project coming in South Korea. They call it Shaheen, which is, they say it is around 80% integration, refinery and petchem, and so are others. Good thing for India about this is that till now, petchem investments have gone to feedstock advantageous regions. Whether it was Middle East earlier, all the petchem investments went to that because of the advantage feedstock. So advantageous market regions were never in the picture or never in the equation. Second, it went to US once the shale gas phenomena came. So all investments in petchem went there. And so these regions, home markets have not developed. So they end up exporting. Middle East is 80%, 85% they export of the products which they make. US has also, from 30%, they have moved to 60% exports of whatever they make. Whereas India is an advantageous home market for consumption. So when you shift from to oil to chemicals, this advantageous feedstock goes away. Oil is a very fungible commodity. It has got an opportunity cost, and that's how it will be valued in any investment decision. So investments will necessarily gravitate towards regions which have technology, which can absorb this technology and also provide a market. I think that's the early advantage for India, and why it should also step into this race to convert refineries into petchem and increase it from lower levels of 10-15% to 40%, 80% kind of levels.
Thanks a lot, Mr. Singh. Moving on, I would like to come to Mr. Sahni, VP India Hexagon. Irrespective of whether it is refining or petrochemicals, I think the role of digitalization is going to be critical from a sustainability perspective in downstream. Your perspectives on that, considering your presence, or rather significant presence in the field?
Thank you, Kaustubh, for the question. Just to put you in perspective, all the gentlemen on the panel except you are my clients, so I have to be a little careful of what I say as well. But digitalization is a fast-paced word that's been picked up after we've started to learn work from home works. After the 2 years where we've gone ahead and gone through a crisis ourselves. But if you look at sustainability, it's pretty simple. We just have one earth to live on. We are already utilizing close to 1.2 times of natural resources that we have. So we have to go ahead and work out a method amongst ourselves in the ecosystem to make sure that we have our solutions in the downstream industry more and more sustainable. As a technology provider and as a solution provider, our part comes into picture where we are empowering the asset owners and the organizations to take decisions with the data that they already have, that they have created. So that in turn leads it to more efficient processes. They lead to more productive assets. So what's there currently available to us, that's much more efficiently used, is our focus towards the sustainability part of it on a brownfield side. And when we were talking about oil to chemical before this, India does have an advantage there. We are already looking at those items in brownfield also, that how do we go ahead and integrate our facilities as well. So these steps, moving towards more efficient assets that we already have on a brownfield side, are the parts where digitalization can really, really help. If we look at scenarios wherein asset owners are able to take the data from the real world and take simulations on a virtual world rather than actually trying it out in the field itself, that will allow them to take quicker, more smarter, more efficient decisions. And that in turn will allow them, their facilities work much more without the vulnerabilities that they're seeing today. So again, as a solution provider, we are empowering our asset owners to go ahead and take decisions more faster with the data that they already have. That's the part of sustainability we are doing.
Thanks a lot. I know the time is clicking down on us, but maybe we have time for one more question for each of our panelists and maybe a quick response. Let me come back to you, Mr. Khanna. Just, from a BPCL perspective, means we have grown up with BPCL, many of us. It continues to be an energy stalwart in the country. How are you looking at this entire energy transition, the balance between fossil fuels and more alternate energy?
In fact, today the morning session, when I was hearing the keynote speaker, it was it was giving so much of clarity that energy transition is inevitable. It has to happen. Now the only debate, whether it is this room or at COP28, it is only a pace about it. And there were issues with the upper half of globe versus the lower half of the globe. But one thing is there, that change is inevitable, and to keeping that in mind, BPCL has planned to go for net zero by 2040. What are the key elements are there? And I think these are the most common for most of the oil company. Like we said, that decarbonization up to the 10% can be achieved through improving the energy efficiency. A few years back, the project which were, not approved by our own finance, today, they have become very prominent because they are improving the energy efficiency. They are making the IRR more attractive, and we are going for it. So that is the one arena where we are working for, where we are improving we are going for the decarbonization by up to the 10%. One. Then next is a big way we are planning to go for the bio-CNG. To begin, our first step will be setting up a plant at Kochi, wherein that the municipal civil waste will be converted into the gas, and the gas will be utilized in our Kochi refinery. Now, the point is that this particular source will be available all across the city, and we are looking how to scale it up in a very big way. But the wish is that 20 to 25% of decarbonization potential is available as per the study done by one of the leading consultants for BPCL. So that is the number two. The third big ticket item will be the green hydrogen, and many actions at ground are planned along with our R&D center. To name a few, we are setting up a green hydrogen production facility at our Bina refinery and expected to get functional by next year end. The hydrogen, as I told about that compressed biogas, which will be generated at Kochi plant, it will be taken to our steam methane reforming, and equivalent will be considered to be the green hydrogen. That is number two. Our R&D is doing a lot of work in the field of electrolyzer. They have, along with the BRC technology, they have successfully established the indigenous electrolyzer. Now the scale-up is being talked about it. And if things work out as per the plan, they are expecting 30 to 40% cost reduction is a possibility. In fact, 2 weeks back when I was in one of the seminar where BHEL was also present, and they also came to know that their job done jointly by BPCL and BARC, and they also coming on board. And if that type of partner coming in, we are rest assured that we will be having our own indigenous electrolyzer in time to come. Apart from that, the multiple electrode, which is the heart of the electrolyzer, in that arena, our R&D team is working, and hope some great news will be there with them to share soon. So, and I think one more area where R&D along with the oil marketing company is working is wherever hydrogen is being used as a carrier gas, and the whole testing facility is being set up at our corporate R&D center. It will be a joint facility by oil marketing company and gas marketing company. And they will be establishing the need for using the existing infrastructure as a carrier of hydrogen. So these were the few area where the green hydrogen in next 3 to 5 years, we will be expecting the success. And one big ticket item for BPCL will be the renewable. And our wish is 1 gigawatt by 2025 and 10 gigawatt by 2040. But we are quite hopeful we'll be able to achieve it much earlier. So these are the few areas where we have a clarity, where we'll be using for the decarbonization up to 60 to 70% in next 3 to 5 years to come. Thank you.
Wonderful, and actually very exciting to hear all the plans. I think one thing that you mentioned was that change is inevitable. It is just about the pace of change in terms of energy transition. And hence, maybe I'll come back to Mr. Tongaonkar and maybe put you on the spot a little bit, sir, that at least Petchem, we all agree, has a big role to play in Vision 2047 for Bharat. What role will refining play?
If you look at the projections that are there for India, it is still clear that India would be dependent on transportation fuels. It would be required, rather there would be an increase of requirement as such. Whatever is projected, MS, HSD, ATF, especially ATF is going to be increased manifold. So here refining is required, or it would be very, very useful. It would be a very prominent player still in the country. To that extent, I think we cannot say that refining can be done away with. All said and done, renewables, even though there's a lot of focus on renewables, they would not be able to take over or be a replacement for these transportation fuels, at least for the next 20-25 years. And even beyond that, it would be very difficult for it to happen. The sheer scale at which we have oil and gas in each and every field, so to say, of our lives, it is very difficult for renewable energy to replace it. And like oil and gas took a few decades to sort of overcome or go beyond coal, renewables also would take quite a few decades to actually replace oil and gas. So till that time, refining is going to be important, and refining is the starting point for your petchems also. And petchems you find everywhere. It's practically part of our life. I don't think it is going to go away so soon then.
Very clear. Maybe I'll come back to Mr. Phukan as well. Just to understand, sir, that at least in the alternate energy space, there has been a lot of policy movements by the government of India. How are oil and gas companies, and in specific NRL, preparing in terms of the overall policy landscape? For example, we are hearing that the blending mandate for ethanol will potentially go up from 20 to maybe even 27. Brazil is already operating at those levels. Similarly, there are EVPLIs, there is renewable for captives, usage. So how do you grapple and prepare for all these policy changes that are coming about?
Kaustubh, you may know that we are placed in a region which is full of biofeed, actually. See, so taking advantage of that, we are already executing a biorefinery based on bamboo. We are trying to convert it to ethanol. And many more of those can come in that region because there are plenty of bamboo over there. So we are only waiting for this thing to stabilize, not because of any doubt that it will be successful, but is there any chance of optimization, because the costs are a little higher to our liking. But nevertheless, the products which are coming out of that refinery is also very valuable. So therefore, IRR stays where it was when we started, fortunately. But definitely, there will be many, many opportunities to optimize costs. So we are waiting for the commissioning. Once we go on stream, we will definitely announce further bio-based refinery. That is one strategy that we have. Secondly, I am only afraid that we are chasing the dream of EVs. So what advantage India has, that is a question I keep on asking myself without getting the real answer. See, even for green hydrogen, one thing which needs to dramatically improve is the grid. Typically, suppose you want to convert entire NRL into green hydrogen. I was just calculating very roughly. We currently consume around 38 to 40 megawatt to run a 3 million refinery. We have a captive power plant. Suppose entire hydrogen has to be converted to green hydrogen, we will need around 900 megawatt. And the state of Assam requires 2,300 megawatt to run. So you are actually talking in that term. So there are limitations and which has to be taken care of. You know that grid losses itself is around 14% in India. So you need to dramatically improve in those areas. And plus EV also will put load on that grid. So therefore, we have to be very, very, pragmatic on what we see. As my colleague from MRPL has suggested, that refineries are not going to go out in a hurry. So, but definitely we are looking for alternates.
Clear. Maybe the last couple of questions before we wrap up. I'll come back to you, Mr. Singh. You spoke about PCPIR a few years back. I was following that policy very closely, and while at the heart of it, that policy was good, but maybe the execution did not happen. But any suggestions from your side on policy that the government of India should think about to further integrate petchem with refining in India?
Yeah, I wish you had embedded some policy makers in this panel here so that we can really explain and force our issues onto them. See, it's a sovereign right of any government to allow only quality products to enter India. What happens in petchem space is, and in many products, running a petchem plant is more of an art than science. So you tend to stray away from the specification sheets which you have, and then those get sold at a huge discount. And then they enter India and they get blended into the normal products, and that's how, then the rat race starts and industry suffers. So BIS had taken this initiative on themselves, that they went around the world and whichever plants wanted to get certified that they produce quality. So BIS has gone around and given those certificates. So some countries have refused to do it. So to help them, what the ministry is proposing is that we will exempt certain products which are not made in India, without realizing that those products, there is, certain products, although not made in India, but the Me Too products are available here, which can be used for the same applications. So, but somehow as an industry, we have not been able to explain this to the government, and BIS standards, it's a sovereign right. We have not done it. So that is where government must listen to the industry, and which is a fair ask anyway. Otherwise, any product can enter India on the customs duties, the WTO mandated customs duties. Second is, this is a very huge, big ticket item. As I said, with a 70 to 80% integration between refinery and petchem, a 20 million metric ton refinery may need a $20 billion investment. So obviously industry, and whereas at the time when this technology is still not matured, there are only plants are just beginning to shape up. And so there is a huge investment risk involved in it. So the key question is, should we sit back and wait for this technology to mature, or be part of this technology development? So obviously industry would look forward to certain investment allowance, some support from government in case things don't turn out to the way we think today. So not much ask, but just we have a common rules for everyone.
Got it. Thank you so much, Mr. Sahni. Last question, Mr. Singh, last question to Mr. Sahni, just understanding the impact that digitalization can have even on operations, because many of our panelists have spoken about energy efficiency becoming one of the key levers for sustainability and the path towards net zero. So any thoughts on that?
Well, we are working on a number of greenfield projects in the oil and gas downstream scenario, where we're looking at some newer refineries or new petchem plants being thought about, or in the process right now. All of them have to be by the end designed for operations. And excellence in operations is something that every asset owner would go ahead and strive for. Digitalization starts not when the operations actually start. It has to be designed in a way that all the planning, designing, execute, operate, maintenance, and even securing the plant has to be looked at on a digitalization framework. That's something I think not taking much of time, because I think the timer also tells us it's up. I would just leave the parting thought as well, that we have to go ahead and look at our greenfield assets in a way that we have to operate them for multiple long years, and we have to make sure that our workforces are more safer. So getting digitalization earlier in the process is much more advised, and that's what asset owners are doing today, which will allow these excellence in operations to be seen once they are on ground. Thank you.
Thanks a lot, Mr. Sahni. Look, we are out of time, but if the attention of the audience was an indicator, this has been a very, very engaging session. I would once again like to thank all our panelists, Mr. Khanna, Mr. Singh, Mr. Phukan, Mr. Tongaonkar, and Mr. Sahni. Thank you so much for your views. Some good insights for all of us. And yeah.